Alright, so now that you understand price action and support and resistance on the charts, there's also some other areas where you can see support and resistance and the price action, and you can use those together with the charts to get a very clear picture. Now this price action, support and resistance, volume, all these different things are just measurements. They're just tools to be able to see the supply and demand, to be able to see these transactions that are creating value. So we're going to look at these other places that you can use, these other tools that you can use and that you will want to use to get a whole clear picture of the supply and demand and the value of the transactions. And the first thing we're going to look at is this level 2. And this is what I was talking about earlier, and I call it the level 2. But you can see right here, this is the bid. The bid is the buyers. The buyers are the demand. So your bid is your demand. The ask right here is your sellers. The sellers are the supply. So this side of the level 2 is going to be the supply, and this side is going to be the demand. So AS stands for ask size. BS stands for bid size. Not what you thought it was it? But you can see right here on this stock currently, there's a 26 under the bid side. So this is the amount of shares that this buyer is trying to buy at this price. Same thing on the sell side. This is the amount of shares, the amount of supply that this seller is trying to sell at this price. So you can see the buyer is at 405, the seller is at 407. That is the difference in value, and they've got to meet and agree on it. And you can see this changes all the time. That's what I was saying about prices. Prices are kind of irrelevant because the real value is happening between the buyers and sellers all the time, so the prices constantly change. So the way you use this, if you know this is the demand, well, how much demand do we have? And on a side note, on Thinkorswim, you add 2 zeros to these numbers. So this 26 right now is actually 2,600 shares. Just like this 22 on the sell side that was there is 2,200 shares. The 1 would just be 100 shares. So I'm not sure why Thinkorswim does it this way, but you just have to add 2 zeros to understand how many actual shares are there. But if our demand at 405 is 25 or now 2,800 shares, do we have any sellers on this side who are willing to meet that price? And you can see up here the time and sales, and I'll bring this, and this is how you use this all together. The time and sales is basically like a receipt. So when you get a receipt, it's a picture of the transactions that you made, all the purchases that you made, which you're the buyer. The store that you bought all the stuff from is the seller. So the receipt is just a list of transactions between the buyer and the seller. And so that's the same thing as the time and sales. So this is just a receipt. You've got the time that an order goes through. This was a buy order because it's green. And you can see there was 714 shares there. See up here that it's got the 2 zeros. Down here it won't have the 2 zeros. Because we're looking at this bid, this buy that's there at 405, or that was there at 405, and the sell at 408, you see there's buyers and sellers who are making transactions in between those prices. We're getting some 405s, some 408s. Got some 407s, 406s. So buyers and sellers are transacting between the bid and the ask price. That space between the bid and the ask is the spread. So the spread just means the space between the bid and the ask. That is it, simply enough. So how do you use this? So if you got 2,600 shares of demand right there at 402, if it comes down to 402, you're going to have at least 2,600 shares of sellers to be able to take that out. If there's not, then that little 402 area will hold up as support. So when you see a lot of buyers, some big demand over here on this side at an area, then you know that's probably going to be a support area. This you see right here, 398. What do we got? That's almost 40,000 shares right there sitting at 398. So it's going to take a whole lot of sellers to push that down. And if you look at your receipt up here, your time and sales, you'll be able to see if we're getting any orders at 398. See, right now we're still getting orders at 4. See, still getting buyers at 4. We're not getting any selling at 398. There was one. So we got 1,000 shares right there at 398. You see his position went down a little bit. Then we're still getting 4s. Still getting some 4s. Let's see if we get any more sales at 398. And if we don't get any sales and buyers see that, oh, this is a support area, and you can see there, look, a new buyer popped in with 2,500 shares on the bid. So that 398 big buyer went down because the price was going up. He valued it at 398, and this guy here is valuing it at 4. So the price is starting to go up because there was not enough sellers to take out that support area where that big order of shares was. There wasn't enough supply to take out the demand. So as demand comes in, if you keep seeing buys over here, like right now we have 2,700 shares on the ask on the sell side at 403, we would need at least 2,700 shares of buys to come through on this time and sales to take that seller out. And when you get that overwhelming amount of buyers overtaking all of these orders over here, your time and sales will start lighting up kind of green. Like you might have 1 or 2 little red spots, but the majority will be green and bigger orders than the sell orders. Then the price will keep pushing up until you hit an area where there's going to be a whole lot more supply of shares at a whole lot more people selling. So if we look at this chart and we look at the level 2 and we look at the time and sales, right now we got 39,000 shares right there at 398. So the price is right here at 398. All right. And if you draw a line back here, right around 398, you can see that candle bounced off there. This candle almost bounced off, and then it dropped below. And what did that old support become? It became resistance. So there's some resistance at that 398, and then it pops back above it. Now it's above it. So what happens? That old resistance has become new support. That's why you have a big buyer sitting right there. The buyers are trying to hold this up above $4. And remember, every 25 cents is a support or resistance area. So $4 is an even number. It's a 25-cent increment. So that's a support area. We know it's a support area from this past chart. And we know it's a support area because we can see how many buyers, how much demand is right here on the bid. All right, so you can see this is Apple. You see we're getting a little bit more buying and selling. It's just kind of going sideways here in after hours. But you've got some resistance, in this 132 area. And you can see that because if you draw your line across, right there, how many candles hit there? You got 3 different candle wicks that hit there, and sellers pushed it down. And you know that they pushed it down because that wick is outside of the open and close. So the open was here, and then it closed here. In that time period, the stock was pushed all the way up, and then sellers pushed it all the way back down where it closed at right there. So that's some heavy resistance when you have a whole lot of sellers, whole lot of supply, and not enough demand. And then you see the same exact thing that happened right here. And if you look right there on the level 2, look how much sellers there are. There was a lot of sell orders there at that 132 area, and see they're still popping in. Sellers are still popping in right here. They're holding it up. There's plenty of supply, and you see 132 sellers still selling, and we are getting some 132 buys, but will it be enough to take out all these sellers that are still sitting there? See, we're starting to get some buys. Let's see if it happens right here where I'm recording this. Nope. See, ask dropped back down, so a lot of selling. So there was not enough buys coming through to be able to take that resistance out. And see, the sellers are still sitting there at 132. So you need a whole lot of buyers to push it up there. Now, if this support area right here at this 131.98, you see there's kind of that support. If a whole bunch of sellers come through and sell all those shares to those people, those buyers will no longer be there, and the price will drop. So when you're trading a stock, say like Apple, you're looking at your resistance, You can see that's a resistance area there as well. If you bought here, because it's looked like some support to you, then it comes up and it hits this resistance area and draw a line back there. You see this was old support back here where these candles were dropping down to this line. Now that line is holding up. So you'd have to see enough buyers right there at that resistance line to take out all the sellers to get the next move up. And there was not enough buyers to overtake the sellers. So what it do is sold off. Buyers will give up. If a resistance line won't break, buyers will give up off of it and sellers will take control and push it down until buyers feel like it's at a price that they want to buy it at again. And it's the vice versa with selling. You're just using the charts with the level 2 and the time and sells to be able to see where all the supply and demand is. So we're almost into trading, but there's one more thing we're going to talk about before we get into looking for stocks and how to actually trade them, how to apply all this into a strategy. And we've got to talk about how to buy and sell the stocks, actually executing these orders. So you can see these buttons here. I have buy MKT, sell MKT. That is market order. A market order guarantees that you will get filled when you press buy. It does not guarantee what price you will get filled at. So if you look at the bid, like on Apple here, you might market buy in, but you may not get filled at 131.95. You may get filled over here at 131.96. If the spread between the bid and the ask, the buyers and sellers, is a lot wider, then you could be filled anywhere in between the bid and the ask or on the bid and the ask. But you will get filled with a market order unless some type of weird glitch happens. It's happened to me before, but very rarely does it actually happen. Every time you hit buy market or sell market, you should automatically get filled, but you won't know what the exact price will be. Now, there's another type of order called a limit order. And you can put limit order buttons up here if you want, but I use this on Thinkorswim for my limit orders because I like it. It's called the AT ladder. Okay, so you can see there's the prices there. And right now where this little white box is, if I move my mouse, the white box is there at 131.96, right there in between the bid and the ask. So that's going to be right around where your price is currently on the stock. Wherever that white box is the current price of the stock. And you can see also on this AT ladder, you can see buyers where some buyers are sitting at. And then you can see where some sellers are sitting at. So this kind of acts as a level 2 as well. So if you're looking at this bid size, ask size, it's the same thing as the bid size, ask size down there. So you don't really have to look at that, but you can see it's kind of nice. You can see where there's some buyers coming in and where some sellers are sitting. So right now I don't have enough funds because I traded today. So because I'm on a cash account, my funds won't be settled until the following business days. So then I would have some funds. But right now, because it's later in the day, I do not. So these orders are not going to stick in. You can see if I click on there, you see rejected buying power. But wherever you click at, it'll put that limit order in and it will stay until the price comes down to that limit order. Now, a limit order will guarantee the price, but it will not guarantee the order will get filled. So if you put a limit order in at 131.95, that's the price you will get filled at if you get filled. If it never comes down, if there's never a seller who wants to sell to you at 131.95, then you won't get filled. Whereas the market order, you will get filled no matter what, but you won't get the price exactly that you want. So limit order guarantees the price, but does not guarantee the order fill. Market orders guarantee the fill, but do not guarantee the price. So you can use either one, limit or market, whichever you prefer. Personally, I prefer market because I'm trying to trade high momentum stocks that are going to have breakouts, and I want to make sure that I get filled. I don't really care too much about the exact price because we're only usually talking a couple of pennies. I only care about getting in it to be able to catch that rip. And then I usually use sell orders as well. Now, you can use a stop loss order And you will want to use stop loss orders to put under the price that you bought at so you can keep from taking a big loss. So for example, here on Apple, see right here we got this resistance. So let's say you bought in right here at this price. You bought in at 131.66. So this is where you bought at, right? You put your stop loss a little bit below that, depending on your risk. If you only want to risk 5 cents a share, just put it 5 cents below. If you want to risk 10 cents a share, put it 10 cents below. But that order will be there in case this doesn't break out. So you see this started to break out. It ran up. You could have locked in profit there, but if you held trying to see if it would break and then it started coming back down, well, that stop loss would trigger that you put in, say, right there. It would trigger when the candle came down and hit it. So it would get you out, and instead of you losing money, a whole bunch of money, from it dropping way down here, you only lose that little bit of money. So you're protecting your capital. So you do want to use stop losses. And you can use the limit stop loss orders for that are up here. Or you can use the market order and have a mental stop loss. But you got to be very disciplined with a mental stop loss and stick to it. If you use an actual stop loss order, then you take some of the pressure of being disciplined off of yourself, because the stop loss order will get you out. Alright, so let's get into how we find stocks and how we trade them and the strategies. So you want to know about float. Float is the amount of shares available to the public. Now, on my watch lists over here, I have shares as an option. And if you use the TOS setup video, like I was talking about earlier, you'll know exactly how to set all this up. But you can see there, shares, 69 million right there on GME, on GameStop. So that's the shares that are all available. Thinkorswim doesn't have a way to put the float, because outside of the float, there are shares that are privately held and different things like that. So this number is not going to be exactly the same as the float, but it'll be pretty close. But the float is the amount of shares available for us to trade, the public. And that's going to be the key thing. So the float is also the supply. The sellers are the supply because they're selling the supply of stocks, but the overall actual supply of stocks that are available for buyers and sellers is your float. So there's 69 million shares out there being bought and sold at all times of the day when the market is open of GameStop. So the lower the float, the lower the supply, the higher the demand, the bigger the rips you will get. So GameStop had a pretty low float, but today this Cat B stock that I traded, you can see is very low float, 20 million in shares, 3 times as smaller than GameStop. It ran from $3 all the way up to $8. So you can get some big rips with these massive, with these low float stocks. So you want to be paying attention to that float, because if you look at Apple, 16 billion shares. So that's a whole lot of shares out there. And that's why Apple doesn't get that big of moves. You know, you usually don't see, if you look back on this chart, there's not any huge candles compared to Cat B, where you've got this big massive candle. Or GameStop as well, where you got these big massive candles. So the lower the float, the bigger the possible rips. Now, the higher float stocks like Apple can make some nice rips too, but majority of the time, the lower the float, the better the rip. So how do we find these stocks? How did I find Cat B? So there's a video specifically for setting up these Thinkorswim scanners. But this is what I use in the morning. In pre-market, before 8:30 Eastern, I sit down and I do a scan. And you can see the settings there that I already have, but if you watch that video, it'll show you exactly how to set them up. And then right there in pre-market, you just hit scan. And look, we get all these stocks that are popping up. And you see there we have the shares. So I've got a max cap at 70 million, because anything under 70 million is going to be pretty low float. Not a lot of supply out there. Right? And then this was in all NYSE stocks, so that's on one exchange. So I also go and I scan in all NASDAQ stocks. So we'll do another scan there, and you'll see our list get there. And what's right there at the top of that list? CATB at the top of the list. So in the morning, though, you won't have this many stocks on this scan because the volume is going to be a lot lower in the morning. And really, you probably want it on like 1 million instead of 50,000. You'll see this will shrink the list some, but not too much. I mean, there's been so much trading already today that this ain't going to look the way it'll look in the morning. Usually you have like 8 to 10 stocks when you scan. So you just drag those over to your watch list. So I just drag LMF over, then PHUN over. Now they're over in my watch list. So now I've done those scans. I want to look through these and see if they have any press releases. Alright, so you can see this is the press release box. This is the live news. If we look, Funware COO Randall Crowder posts YouTube video on the horror of short selling, includes appearance on Benzinga's Zinger Nation Power Day show or whatever. So the COO of this company was on a TV show. So that's kind of good. There's certain keywords you want to be looking for, certain types of press releases. Anything positive, primary endpoints met, agreements, mergers, deals, big amounts of money that they may have received, awarded, FDA clearance, FDA approval, or any other type of approval. But I have a video for this as well, going into all those different keywords that you can look for in these press releases, so you don't have to go through and read every single press release on all these stocks. You just look at the title. So there wasn't much in that one. Let's look at Cat B and see if it had any positive. So right down here, 7 o'clock in the morning, see Catabasis Pharmaceuticals announced acquisition. So they're acquiring something. They are gaining something. That is a positive for the company. So what will happen with a positive press release? A lot of times you will get a nice big rip. But I will go through this list and take off all the ones that doesn't have positive press release. But just because it has a positive press release does not mean that it will automatically go up. There are cases where a stock can come out with positive press release and the stock will drop in price. You never know exactly how the market's going to react. But that's why you have to have a little bit more of a strategy than just grabbing one of these stocks with a good press release and jumping into it. After I've made my watch list of my stocks that I want to watch, the ones with good volume, a lot of people buying and selling, good PR, I want to be watching those stocks to look for patterns. Now, the two patterns I look for are very simple, and that is a U shape, which sounds exactly what it is, a shape of a U, the letter U, and triangles, which are exactly like they sound, triangles. So looking at Cat B here, a U shape is where the stock is going to drop below a resistance line. So if we draw the resistance line across this, because you guys know how to do resistance already, so we talked about that. So we draw that resistance line and we look over here and we can see that held up as resistance multiple times, and then when the market opened, it sold off, but then it started coming back up. So that's why I was saying it may not matter if you have a good press release. You may still get a sell-off at market open that could continue throughout the day. But this curled up, buyers started coming back in, and you see the volume bars, more buyers. Buyers are coming more and more into droves, back up to this resistance where this U shape is, this curl up, and you get all those buyers and it breaks through that resistance. And this is a U-shaped breakout pattern. So you're just looking for a U. You mark out your resistance, you see a stock drop below it, come back around and start coming back up to that resistance, and you see a whole lot of buyers starting to come in, and then you get this nice breakout. Now, where do you want to get in on a U-shape? You don't want to get back here at the start of the U-shape because it could just keep selling off. You don't want to get in the middle because it could just keep selling off. You want to wait for it to start curling up. So right in through here, right below the resistance. So that way, if it doesn't break the resistance, you have a nice little cushion there. You could lock in your profit, and it'd be a small profit, but you won't take a loss if it gets rejected there. So buying right here in the kind of middle curl right there is going to be where you want to enter. And then you hold it there to wait for to see if it's going to break out. It starts to break out, then you can hold it up to the next resistance line. I didn't get into this down here in this U shape. I called it a little bit late, so I watched it come up. After this resistance break through here, there's no reason to be in the stock. You don't want to enter way up here. You know, this could turn back around. You got to wait, let it do its run, be patient, and then wait for another pattern. So right here, this is not really a U shape. It kind of looks like a U shape, but this is actually a triangle. And a triangle is going to be made by your two trend lines. Your upwards resistance trend line, see that? Remember those? And your support trend line. See those? Now we got a perfect little triangle. Pretty simple once you understand support and resistance, right? So same thing with the downtrend. When that downtrend line breaks, that price action that's going down, when that breaks right there, then you can have a nice pop-up out. And this is where I got in on this triangle right here in the middle. You don't want to try to get in the triangle back here at the start because it could just sell off. You wouldn't see the triangle yet. Right there, it could just went boom and sold off. You don't want to get in here still a little bit early. You want to wait for the triangle to form some. So you need to see multiple candles hit in that resistance area, midways in the triangle, somewhere around in there. When you're almost to the tip of the triangle, that's where you want to get in. And then you can just put a stop loss right below this trend line to protect your capital. And then wait for buyers to come shooting in if they do. And it'll break out. If it doesn't break out, it'll drop below that triangle, but your stop loss will get hit. You'll take a loss, but it'll be a very small loss. However, if it doesn't, if it continues on this little upward support line, the support trend line, then you can get that breakout. So we got a U shape here and we got a triangle. These are the two things we are looking for. So I got in here, it popped up, and I was up in some decent profit there, but on this candle right here, it kind of freaked me out because it started coming down a little bit quick, and it came back down into this triangle, and I put my stop loss right there instead of a little bit lower. I should have just had my stop loss back here. So I ended up only making $2 instead of making this whole rip from my $5, I think it was $5.50 I was in at that area. All the way up to $8. I could have made a whole lot more profit, but I messed my stop loss up. So you got to be aware of your stop losses and all that. So let's see if we have any other patterns on this. Now, you see there, this could be considered a U shape. So if you draw the line at the U shape, right? See it come down, starting to come back up. And if we draw this back, you see that was resistance back here where these candles hit at. That's resistance again. It couldn't hold up as support when the stock sold off. So you do have a little U shape, so you let it drop. It starts to come back up. You get in about right there. It comes up to that resistance. It doesn't break, so that you would sell and you make a little profit. Instead of the big rip, you might not get the big rips on the U shapes. You might just get that little bit up to that resistance. But that way you're at least being careful. And if you look, it actually made a couple of different U shapes. Made the U shape there, hit resistance, came back down, curled back up, hit resistance again, came back down, curled back up, hit resistance again. And this time it did pop up a little bit higher. Now at this time of day, this has already went on a pretty big run and was in a downtrend, especially when you get to this point. So if you take this line out, ignore that line now, and go back to our price action, you can see you attach that. Look at that. Downtrend, stock's pointing down now. So these U shapes will become less effective. Triangles as well will become less effective once the price action is in a downtrend. Now before that, the price action was in an uptrend, right? So you take your line, you draw it right there, uptrend. So you know this U shape here is going to start the upward momentum. This one that was back here. And then that triangle there was still in the upward momentum. So once the sellers took back control of this, when this cracked this support line, the support trend line, it started selling off. So once you find the pattern, what do you do when you're in there? Let's use this example. So it's 850. We see this pattern. We got the resistance line out, drawn across, and we're sitting here. We're like, okay, we're going to buy here. So we buy here, right? It runs up. We're holding to see if it's going to break. The buy-in volume starts increasing. We're looking at the level 2. There was probably a bunch of buys coming in at that line, at that kind of 388 area. We got in at 350, so we're up about 30 cents there. The buyers keep coming. It starts breaking through. So where are we holding to? We're going to hold to resistance. So this ended up hitting right here, some resistance, 572. Where else could 572 be resistance at? Well, let's look at this chart. Let's look at this daily chart, see if there's any past chart resistance. And you can see right in this 575 area, draw the line right across there. 572, 575. You can see this was resistance back here. Stock came above it, bounced off that line there, bounced off that line there, bounced off that line there. So this old support became new resistance. And that's where you map your resistance out, and you know this is an area to sell at right there, at that 572. If it doesn't break the 572, you sell out. Or you can sell some of it. You could sell half if you wanted to, and then hold the other half to see if it makes another U shape or triangle. And you see it made that little triangle, right? And then it broke up out of that triangle. So if you held half the shares there, you could have got a little bit more profit out of that if you wanted to. But you definitely want to lock in something at that first resistance area, that 572 that we saw way up here. And you can see that's at 797, about 773 there. 773, draw the line. Look at that. Look at that. Matches up perfectly. There's a couple of places where it hit right there. Candle hit there, candle hit there, candle hit there. That's at resistance back there. And where did the stock end up stopping at? Right there, at that resistance. Right across, perfectly across these two candles. So that's how you can tell your support and resistance, and you're going to use the support as your entry areas and the resistance as your selling areas. So on this, it's hard to do with U-shapes. It's hard to get in at support because the support is right here on this U-shape. So you can't really get in right there. You don't know for sure if it's going to curl back up. You have to wait for the curl and then buy there, and then you could put your stop loss right below that if you wanted to, but that would be a pretty deep stop loss. Normally you want a 5 to 10 cent stop loss. The way you want to mitigate your risk is a 1 to 2 ratio at least. So say you trade $1 worth of a stock, you want 2 times that amount for your reward. So that would be $2. So you only want to be risking that $1 to make $2, and that is a 1 to 2 ratio. If you can get a 1 to 4 ratio, that's even better. So you risk $1 to make $4. As long as you're consistent with those stop losses, say you trade that $1 of a stock 4 times, and 2 times it goes to $2. So you sell each time. So now you've went from $1 to $4, right? Because 2 times 2 is 4. And then the stock drops back down again. You try to buy 2 more times at $2, and it drops back down to $1. So you lost $1 each time there. So you lost $2. So 2 minus the $4 that you originally made, you're now at $2. But out of those 4 trades you made, remember you started with $1, and by the end of it, even though you lost twice, because you kept your losses small, you mitigated your risk, you ended up still with $2. And you didn't have to win 4 trades. You only had to win 2 of the 4 trades. So that's why it's important to keep your stop losses tight. Keep them small so you're not taking big losses. You want your ratio to be at least a 1-to-2 ratio, but a 1-to-3, 1-to-4 is even better. So on this U shape, getting in right there at that 350 area, right where it started curling, my stop loss would have been around about 343, maybe even a little bit lower, like 339, maybe 11-cent stop loss, right? So I was risking 11 cents a share on this for it to break out, and I was expecting at least for it to hit this resistance at 390. So I'm risking 11 cents a share with a 350 entry to get at least 390, which is 40 cents. So the 11 shares I was risking per share, the reward on that was 40 cents. So that's almost 4 times the amount that I was risking. And then if you get a massive run like this, you can do the math, then that it gets exponentially more. So it's a whole lot more reward versus that little tiny risk. You don't want to be trading a stock where you have all kinds of risk and very little reward. So if you got something where the resistance is really, really strong at, like this area was probably not going to be that strong a resistance, but say you were buying and it ran up to 797 and you buy there, well, you're risking a whole lot because where's the support at? You know, the support is at least way back here at this resistance. So if you get in there, you're risking all of this for just this little profit, and it's not worth it. So that's why you have to use these strategies, these U-shapes or triangles. And there's plenty of other strategies out there you can use, but these are my 2 favorites, and they are the 2 simplest to play. So once you have everything set up, and once you are ready to trade, you do your scan in the morning, you make your watch list with those positive press releases, and you watch those stocks that you put on your watch list for them to make some type of pattern. So Cat B, we saw a U-shape and a triangle. Let's see if we have anything on GameStop. So GameStop, you know, it's just so crazy moving that it's really hard to really see a pattern. This was more of like a V shape right here. This wasn't really a U shape. It was straight down and straight back up. You got to have that curl for a U-shape pattern. You don't want it straight down and straight back up. You want it to be a nice bowl shape. You know, a nice little pool shape. Little round bowl shape. So no U-shape there. And you can just see there's not really very many patterns until about right through here. So, I mean, this is kind of a U-shape, but it's pretty ugly. And you don't have the round bowl so much. The candles were real choppy. But you can see that was a resistance area. It dropped down and it started curling back up over here. Hit that resistance. Buyers come in. You see the buying volume bar pushing up. And you got a nice little move up to that next resistance line right there. So you could have made a decent little profit there on GameStop, about what, $33 a share that you could have made right through there. So nothing back here. There's no reason back here to buy this. There's no reason at all. See, no patterns, anything. This is all just nonsense, crazy trading. So you wouldn't want an entry there. The only entry you would see on this is all the way over here. Right in there. That nice little U-shape. And actually, this kind of is a triangle. Yeah, there you go. So that's not really a U-shape. That's a triangle. Sometimes U-shapes and triangles can look very similar because you're looking at that resistance line. But you can see there it's a triangle. It came up, hit right there at the resistance, dropped down, came back up, dropped down, came back up. And the way that you know it's a triangle is the candles are getting tighter and tighter towards the tip of the triangle right there. So you can see these candles were a lot thicker. The bodies were a lot thicker, and then they started getting smaller and smaller, and the area that the price was moving in started getting smaller and smaller up into this tight little triangle, causing a little bit of a squeeze. So as the price is doing like that and it's getting tighter and tighter, you're coming to a breakout point. and it's either going to break up or it's going to break down. To know which way it's going to go, you have to wait until you get to that tip to see the buying volume or the selling volume. This one broke out. So you get in somewhere right around there in the tip, close to the support line. Put your stop loss right below this downtrend. And then when the buyers start to come in, you can see it break up. Now, if it doesn't break up and it breaks down, then your stop loss would get hit. You would take a small loss, but this would be a decent play. You'd be risking a little bit right there, a couple of dollars for $30. So that's a good risk to reward ratio. Now, why didn't this triangle get a big breakout? Do you recognize why this triangle only had a little breakout, and the triangle on Cat B there, why this triangle had a bigger breakout? Price action. So we're back to price action, right? So the price action of this stock was sideways until it broke up and got into upward price action, which gave you a lot better chance of a bigger rip versus GameStop, which was in the overall downtrend pointing direction of price action, right? So you're less likely to have these breakouts on these triangles and these U-shapes if the price action is pointing down overall. You can still get little ones like this. Of course, on GameStop, $30 a share doesn't seem that little, but it's not as big as a rip as GameStop has been making. But you can see there, it couldn't get much higher than that because the sellers had control pretty much all day. Price action was telling us already that sellers had control of this on the overall time chart. Just in that little moment of time there, the buyers took control. And these patterns, these U-shapes and triangles, all they are consolidation. And consolidation is just some indecision between the buyers and the sellers. So right through here, these buyers and sellers were kind of negotiating back and forth like, hey, let's buy here, let's sell here. They're doing all the negotiations. So nothing real crazy is happening. They're just kind of even. The demand is even with the supply, so you're just kind of getting this sideways movement, or maybe a U-shape or a triangle like we got there. And then the buyers took a hold of it right there and pushed it above the top of the triangle. So you can find these patterns every single day on a lot of different stocks. You want the stocks to meet that 4 criteria: the high volume, low float, good PR, and a pattern, a chart pattern. Once you have all 4 of those, you can take your entry on it, where I've been explaining to take entries, and then have your plan to sell at a resistance area, at least some of the shares, so that you lock in some profit. And we can literally click on any of these stocks over here and see patterns. Right there, see that? Nice little U-shape, nice little curl around. When it came back up to that resistance, big buying volume bar, pushed it through, and you got a nice move up. There's a break of $10 all the way up to $11.94, so $12 rip out of that U-shape. And there was a little U-shape right here as well that you could have got in and got in at the bottom there for that nice rip, because if you draw your resistance line, right across there, you can see it, that in pre-market, that was the pre-market high. So pre-market high held up as some resistance until it was able to break with enough buying volume. So when you're practicing drawing your support and resistance lines, also practice trying to spot U-shapes and triangles. The more experience you get at being able to spot those, the more consistent, successful trades you will be able to make. But like I said in the beginning, this is not an overnight get-rich type of thing. It takes time, it takes patience, and it takes discipline. It may take you years before you become a consistent, profitable trader. So if you got into trading because of all the GameStop hype and you think that you're going to get rich quick, it is a possibility, a very slim possibility, because you'd have to be extremely lucky. But the odds are you're probably going to lose your money. So if you take your time, ignore the GameStop hype, because the stock market isn't going anywhere. These rips happen all the time, so you're not missing anything. And you want to be able to control your emotions, and one of the biggest emotions that gets us in trouble is FOMO, the fear of missing out. And that's why you are watching this video right now, because you feared missing out an opportunity to make a bunch of money on GameStop. You don't want to fall victim to that fear. And what do we fear? Well, we don't know, right? You fear missing out on it because you don't know if that could have been an opportunity for you to make a bunch of money. Well, if you know what you're doing, then you no longer are susceptible to fear. So you can overcome all this, and it's going to be a grind. It's going to take some time. It may be 6 months before you become a profitable trader, but maybe 3-4 years, maybe 5 years. Once you become a consistent profitable trader, though, this is a skill that will go with you the rest of your life and can transfer over to cryptos, gold and silver, because all of this stuff is just supply and demand and value. So these charts are the same charts that will be on cryptos, the same charts that will be on the gold and silver, the same charts that will be on options. It's all the same stuff. These are just tools of measurement of supply and demand and value. And it takes some time, but it is worth it, because you can be your own boss and pay yourself a nice paycheck every week if you know what you're doing. So it is very worth it to take that time, that patience, and be disciplined and learn as much as you can, and always constantly be learning. Anybody who tells you they're a guru or a master is full of shit. You're a student of the stock market and the financial markets until the day you die. Hopefully it doesn't take you that long to be profitable. But if you watch my channel and other channels that will teach you real stuff, not the nonsense that the YouTube ad people are pushing, or Reddit and all that stuff, if you take this knowledge and learn it and grow it and get more and more experience, you will be able to become a consistent trader. Now, don't give up. It may get hard. There may be times where you're losing some money. Step away from the computer. Don't trade for a couple of days. Give yourself a mental break, but come back and keep coming back. Take each one of those failures as a lesson. Figure out what you did wrong. Some people keep a journal of all their trades, and you can do that, and that will help you to look back and say, what did I do wrong there? Okay, don't do that anymore. What did I do right here? Okay, that worked. So I'm going to do that. I don't have a journal because my journal is all recorded live. I do all my trading live, so I have a whole video journal of every single trade that I make that I can look back on and be like, okay, what did I do there? So that's another option. If you don't want to write your trades down, you could just record your trades and go back and watch them. But either way, you want to learn from those mistakes and don't give up, because it will pay off eventually at some point when you get there. Now, as far as taxes go, I'm not a CPA. I tried to learn our tax systems, but our tax systems are a bunch of nonsense. And with everything else that I'm doing, I just don't have time to learn about taxes. So I hire a professional CPA to do my taxes for me. And a professional CPA is not some guy who works at H&R Block. You want an actual professional CPA, because there's going to be tax write-offs and benefits that you can get for certain things, and like losses that you can write off and all that. So seek an actual licensed professional CPA to do your taxes for day trading, and any other business as well. Any investing or business that you do, you want a professional CPA, because they're going to save you a lot of money. They may cost more up front, but the money they're going to save you in taxes is going to be well worth it. So that's it for this guide. If you have any questions, leave them in the comments below. I will answer them for you. If you guys enjoyed this video, if you learned a whole bunch, give me a thumbs up. That like helps with the YouTube algorithm. If you're new to the channel, hit that subscribe button and notification bell so you can get more content like this that's going to bring some value to your life that you may be missing out on.